So we have covered the SNR section. Now just go through the round numbers, reversal points and other things. So how are important reversal points determined? First we will go through round numbers, as we are tickering for it. Ironically, when prices reach around round numbers, the tendency to buy and sell increases. People think in terms of round numbers. Otherwise, why would Walmart sell a shirt for $29.95 rather than $30? They know people subconsciously will associate with the 29 and will believe they are getting a $29 t-shirt rather than $30 one. People think in terms of round numbers and act accordingly in the securities market as well. The current problem with the concept of round number is that knowledge of that tendency is widespread. From the standpoint of entering other orders, then it is best to determine entry and exit points based on the technical situation rather than worry about round numbers. So, how are important reversal points determined? Our previous question. The more important the reversal point, the more important the support or resistance level. There are a number of ways to identify a significant reversal point. Let us look at some of them. So let me aware you that in this section we focus primarily on how to determine significant troughs and support levels. Of course, significant peaks and resistance levels would be determined in the same fashion, only in the opposite direction. So first we have DeMark or Williams method. Tom DeMark and Larry Williams each have a method of determining a reversal point by using the number of bars in a bar chart or on either side of the suspected reversal point. In a low bar of, for example, the analyst may look for the two bars with higher lows directly on either side of the suspected trough bar. The number of bars on either side can be increased to boost the importance of the trough, but the number of troughs will be sacrificed. The higher the number of confirming lows necessary, the more important but less common the trough. So to explain this ramble, I have an example which is figure number 4.6. So each of the two bar lows and highs is marked with an arrow point. Is not a trough because it does not have at least two bars on either side of it with higher lows. Likewise, point B is not a peak. It does not have two bars on either side of it with lower highs. In point C, a trough, we do not know because we can't see if there are two bars to the right of the low to judge the point. So there is another method which is called percentage method. Another method of identifying significant trough is by deciding beforehand how much the price should decline into the rally from the trough. A percentage is usually used. Using 1%, for example, anytime the price declines more than 1%, makes a low and then rallies. More than 1% would define a 1% trough. The larger the percentage used, the more important but less frequent the reversal point. Then comes the gun 2-day swing method. WD gun swing method is similar to the DeMark-Williams method. To find a support point or through a low bar is identified. Once the low bar is identified, let me get to the chart. Okay. Then we come to the high volume method, which is over here. Very large volume can also identify a significant reversal point. High volume indicators that larger than usual activity occurred on the trading day. Figure 4.8 shows that and this was the gun 2 bar swing point which I was explaining before in the round number sections. So figure 4.8 illustrates a one-day reversal. 1 or 2 day patterns can occur at peaks or trough. When these occur on high volume, they usually signify important reversal points. Because these formations usually occur at a stage of high emotions, they signify either a panic or a speculative bubble. As such, the actual price level at which the reversal took place is not identifiable on a large bar chart. Sometimes intraday action must be inspected to see at just what price level the majority of buying and selling occurred. In next section, we will see how the zones are drawn. We have discussed earlier. Thank you.